This is the digital notes session 3 for financial accounting, and earlier we have already discussed about the statements, basics of financial, how we are going to manage the accountings. So now we are going to talk about today about the transactions. So first of all, uh, uh, what is transaction, that I am going to explain to you. But before moving to that, I am going to give you the reference book, which book I am referring to. Okay, so this is the book you can see on your screen, and I have described its more details on the description, so you can check the name of book, authors on the link description. Financial Accounting, International Financial Reporting Standards, 11th edition. Okay, book is from Pearson Education, Walter T. Harrison, Charles D. And I am opening second page for you. You can see this. This book you can purchase from Amazon or whosoever is your nearest bookseller. And I am opening the page for you. So you can refer this book, and I am using this book for you as a reference. Okay. So let's talk about the transactions today. So we have already discussed about that there are 4 types of statements, and all the finance is dealing with the 4 types of statements. What are the 4 types of statements and how it is going on, that you can get the link description in my earlier session. Okay, so now what is financial transactions? So before moving to financial transactions, let us understand what is transaction first. Okay, so sometimes when you go to visit ATM, you can see that you have withdrawn 100 pounds. Okay, sometimes it happens, suppose you withdraw 100 pounds, but there is some problem with the machine. So what happened with that 100 pound, whether it is with the bank or with the you? So to understand that, we should try to understand what is transaction. And when we talk about the financial transactions, you just include financial in that term. Okay, so transaction is simply, suppose this is your bank. Okay, this is you have withdrawn 100 pounds. 100 pounds you have withdrawn from your bank, but due to some reasons this transaction is cancelled, money is not withdrawn and is stuck in ATM. So now what will happen? Financial institution, which is your bank, this is going to reconcile the statement. Reconcile the statement means, suppose there are 1000 pounds in bank ATM. At the end of the day, this will see, okay, total 10 transactions happened, but money withdrawn was 900 only. So 100 pound, that was not actually successfully transaction. So this 100 pound, after some times, when bank and institutions are satisfied, that will be credited bank in your bank account. That's what, when there is any transaction issue, bank used to give you certain warnings that your balance will be in your account after 7 days or 3 days, whatever the standard rule for that bank. So this is known as your transaction. Let's try to understand more about transaction, because this is very tough to even understand transactions, and when we start to say financial transactions, we start to shiver. What is transaction? What is financial transaction? It's very tough. So if you understand transaction, then you will understand financial transactions very easily. For example, you are going to rent a home. Okay, you are going to rent a home. Now what you will do? You will go to a dealer. Suppose this is your dealer, or some countries they used to say brokers. So when you are going to broker or dealer, what you are going to do, you are going to pay certain security deposit to this dealer. Now this dealer is going to contact with the landlord. You are not directly contacting with the landlord. This dealer is going to contact with the landlord. Now what they will do this, he is doing two transactions. Transaction L with landlord. Transaction 1, transaction T, I will say with the tenants. So tenants will give the amount to him. He will deduct certain commission from this, and remaining he will transfer to the landlord. In the replacement, what landlord will do, landlord will sign an agreement and give that legal document to you, and after that legal document you are authorized to live into this home. So once this two-way transaction is completed, you are authorized to live into this room. Now what is the role of dealer here? Dealer is going to ensure the legitimacy of this tenant as well of this landlord. If there is any problem, dealer is your guarantor who is going to give you the security that yes, things are as per expectation. So this is one of the example of transaction. Let me give one more example of transaction, then we will move ahead. Transactions may be different types, bilateral transactions or sometimes secured third party transactions where third party involved. This is the example which I have given to, that is the third party involved. Suppose you are going to a normal local shop, okay, and here you are, my drawing is not very good, so you can consider this is a man, okay, this is a man who is going to purchase something from local shop. Let me take the name of commodity milk. Normally every morning we are going to purchase milk. So you are going to local shop, you are paying him 2 pounds. 2 pounds to get the milk. When you pay the 2 pounds to him, local shop person, he is going to give you milk of amount 2 pound. So once you paid the 2 pound, he paid you the milk, it means transaction is over. What happened here? You purchased the commodities and you paid the cash, or either by the bank credit card or whatever you are using. But in last, you are going to pay the cash. Either it is in the physical form or in the electronic form. It is going to credit it to the local bank shop's account, and he is going to give you the commodity, that is the milk. This is another example of transaction. Once it is successfully happened, transaction is completed. But suppose you have given 2 pounds and now you are going to say you got 1 pound milk only, not 2 pounds. Or you have paid 2 pounds but milk is expired. So that transaction will go into the dispute. Okay? We are not talking about dispute here. We are talking about here financial transactions. So let's move to the financial transactions. So what is the standard definition of financial transactions? Is an event that has a financial impact on the business and can be measured reliably. Transaction, I am repeating again, a financial transaction is an event that has an impact on business, and can be measured reliably. Can be measured reliably means if you are not able to measure the reliable, it means that is not a transaction. For example, if I talk to you that I will give you this is a pot. Okay, I will take this as a pot, and you are going to fill certain sugar in this pot, and you are going to give that sugar to me. Will it be a financial transaction or valid transaction? No, because you cannot reliably measure how much is the capacity of that pot. So when you are doing some transactions, you say 2 kilogram of sugar, 3 kilogram of sugar, 4 kilogram of sugar. It means you can reliably measure that. Okay, so financial transactions. I am repeating again. Learn this definition. A financial transaction is an event that has an impact on business and can be measured reliably. Example, for example, you have sold your car. So there will be certain amounts by paying which you have either purchased car or sold your car. I have first given example of milk, where you are given 2 pounds and purchasing milk. So these are valid transactions. Okay. Now, what is the aim of transactions? So transactions are going to impact the business. It means they are either going to increase your assets, or they are going to increase your equity, or they are going to decrease your assets, or they are going to decrease your equity. Okay, so how transactions are going to happen, that let's see. Last time I have given you one example of your salary. We all better understand in terms of salary. Suppose at the start of 2020 you were having 2000 pounds in your account. Okay, now most of the companies used to give you quarterly balance. So at the end of Q1, okay, let's see, after quarter 1 what happened. You have earned certain benefits either in the form of interest or in the form of earning or whatever. So you have earned around 3000 pounds from here. I am just taking as an example as a earning. So what will happen? Your net account balance will be now 5000. So what 5000 is going to do this? These 5000s are going to increase your assets, because your cash balance earlier was 2000, you have earned 3000, now your total balance is 5000. So your assets are going to be increased, and I have already given you formula about LA. Assets equal to liability plus equity. Since you are earning here without increasing any liabilities, it means your assets increases. So what will increase? Your equity. I am repeating again. If somebody asks you whether your earnings is going to increase your equity or decrease your equity, so formula is simple. I have given you earlier formula as well. What is the formula? In digital notes 1 I have given assets equal to liability plus equity. Since you are earning here without increasing any liability, so what will happen? So your assets are increased to 5000 from 2000. So what will happen? Your equity will increase by 5000 minus 2000. So your equity will increase by 5000. Now let me explain you into the layman's language. What is equity? Equity is your share in any business, or equity is your partial ownership of a company. So what will happen, suppose your company have certain assets. For example, your company is having 100,000 pounds. Okay, you are one of the shareholder of that company. So if you have earned 20,000, what will happen? Your share will increase or decrease? It will increase, because earlier you were owner of the 100,000, now you are the owner of 120,000. So your equity will increase when you are doing earning. Again reiterating, your equity will increase when you are doing earning. Now you already know what is the opposite of earning in finance. Expenses. Now what happened, we all have seen this, one of the biggest challenge of COVID-19. A company was performing very well. Suppose it is tour and travels company. This is owing 100,000 pound at the start of quarter 1. But again what happened in the March, lockdown announced. Okay. Now what will happen? Go to that equation. Assets equal to liability plus equity. Keep in mind, this equation is the backbone of financial equations. I have already told you so many times. So what will happen? Your earnings are not going to be increased. In fact, it is decreasing. Now what will happen? Your liability will remain little bit same, because if your airlines stopped, your fleet is not going, but you are paying money to your employees. And if you are paying money to your employees, because that is your liabilities, you are paying for the rent of your whatever space hired for the office. So what happened? Your expenses are going high. So when your expenses are going high, so I told you the opposite of earning is expenses. So when your expenses, it means liability is going on, it means in the starting, suppose you are owing 100,000 pound, but due to some reasons you did not earn anything. I am just taking earning equal to 0, just to give you understanding of the concept. There will not be any ideal situation where earning is 0 or earning is negative or earning is positive. It can be anything, but here I am taking earning equal to 0. So what will happen? Now A equal to L plus E. Now what will happen? Since you were having earlier assets of 100,000, but you are paying expenses. After quarter 1, you have paid 20,000 in the form of your expenses, either to paying salary to your staff or office expenses. So what will happen? At the end of quarter 1, you are having only 80,000 pound. So what will happen? Your equity will decrease. Your equity will decrease, because earlier you were owner of the 100,000 pound, but now you are the owner of only 80,000 pound. It means your overall equity decreased by 20,000. So now it may be very complex if you are going to understand in standard financial terms, but now come on your student age, you can better understand. If you are having 10 pounds in your pocket, your father or your whosoever or your loving beings who are financing your education, if they are paying 5 pounds to you, it means your pocket is having 15 pounds. So you are owner of large money, because 5 pounds you have earned. Now suppose you are having 10 pounds, but 5 pounds you have spent on your food or sandwich. Now what will happen? you are the owner of 5 pounds. It means your equity decreased by 5 pounds. So whenever you will pay amount, you will expend something, you spend something, your equity will decrease. Whenever you will earn something, your equity will increase. This is as simple. Whenever your wallet is going to expand, it means you are earning, your equity is positive, increase. Whenever your wallet is going to squeeze, it means your equity is decreasing. So equity is nothing but your wallet, how much money you have in your wallet. Okay, so I hope you have now understand the equity, its contraction, its expansion, and how you are going to give it positive or negative. Okay, if you have any questions, any type of questions related with the transactions, you can put in your comment for this video, not any other financial accounting, but only related with the transactions. It may be electronic transaction, it may be physical transactions. I will answer that questions to you, and you can also email me. Email is already there in the end of this video. Okay. Then assets equal to liability plus equity, I have already explained to you. Now next coming into one, how many types of accounting is there? So one is double entry accounting, another is T accounting. So what is double entry accounting? Double entry accounting. So double entry accounting is each transactions affects at least 2 accounts. Each transactions affects at least 2 accounts. Now come back to our example of milk. Here was the shopkeeper and here were you. What will happen if money is decreasing from your end? Then shopkeeper's account is credited. So if you are paying 2 pounds, your account is credited. Shopkeeper's account is credited. Now what will happen in terms of commodities? His stock is decreased by 1 milk bottle or 2 milk bottle, whatever will be standard as per your place. So his stock will be decreased and your stock will be increased by milk bottle. So this is the replacement. So double entry is going to at least impact 2 accounts. Make sure. Okay. Now another is the T account. T accounts are normally not going to give T accounting. They are not going to give the 2 accountings together. They are going to impact only 1 account. Okay. But what T accountings are going to display here? What is T? First of all, whenever somebody is saying to you T accounting, do not get afraid. First of all, take the characteristics of T. T is just like a balance. If you cannot make a T like this, where one arm is very shorter, another arm is very longer. T is always one straight line and both ends should be equal. So whenever somebody is saying to you T accounting, keep in mind the balance. Okay. So T accounting is used to keep track of increase and decrease of the balance item of interest to the different parties. So what will happen? T accounting is normally accounting. Have you any time observed your bank statement? Your bank statement is one of the best example of T accounting. There if you will go and see, one hand side they are going to mention debit, another they are going to mention your credit. Make sure if your start of the month balance is 2000 and you debited 1000 and you credited 1000, it means at the end of the month your balance will be 2000. So what it is going to tell you, this is going to tell you your debit and credit will remain same for the particular month. This account is not going to impact any other's account. This is your own account. Similarly, organizations are maintaining their own balance sheet is a part of T accounting. Okay, whenever you are going to give earnings, okay, expenses, that may impact some other accounts as well. For example, if you are going to update account receivables or account payables, so account receivables means you are going to receive money from someone. Okay, so in case of dispute, you can check the source account as well as you can check your own account. So account receivables and payables are different. So keep in mind, all the businesses involve two types of transactions. One is debit, another is the credit. Either they are going to give the money to you or they are going to take money from you. Our milk example, you are going to give money to shopkeeper. Shopkeeper is not taking in his own pocket. He is going to pay next time to the supplier next day so that he can get additional milk in your time. Okay. Now I am going to give you one homework which you can do from your home, and if you want you can comment here. I will help you whether your answer is correct or not. Take different types of approach, how earnings is going to increase your assets or decrease your assets, expenses, how expenses are going to impact your equity. Okay, so you try to do different scenarios and try to search, and you can learn from here what is the different relation of your equity, expenses, earning, dividends. All these things are there. Dividends and all these things I have explained you in earlier sessions already. Okay, you can check. Okay, so this is all about basics of transaction, how transactions is performed into financial statements and what is it, transaction. If you have any example in your mind, or if you are not clear with anything related with the transactions, please do drop your questions either by email or by comment and I will get back to you. Thank you so much for watching this video. Again, I will not say share with anyone, because if you like it, you will share by default. If you do not like, that is also fine. Please share your feedback. We will try to improve on it. Thank you for watching the digital notes of Madhuraj. And if you want to pass any feedback, you can write down an email to me. And next time I will come further topic of it. And again, I would like to reiterate, the book which I am following is this one. In addition to book, I have put in my description, there is a very good website which I have already found and I am using it. Its name is Investopedia. Investopedia. So you break out Investopedia, you will get it in Google, and also this is in description of video. Investopedia is a good website which I found for studying financial terminology. So thanks, your comments and feedbacks is more welcome. Thank you.